Hello guys, welcome back to my channel. Don't forget to like, comment, share, and subscribe. The revolutionary Quds Corps is Tehran's elite force that goes by the IRGC acronym and is blamed for many terror acts around the world. The current versions of the text and what they are demanding drops it, said the Biden administration official who spoke to CNN, noting that the U.S. had repeatedly and consistently rejected Iran's demand. So, if we are closer to a deal, that's why the official date. In our August 17th analysis on the Iran nuclear deal, we laid out the impact that a fast reinstatement of the Iran nuclear deal would have on the oil market. If Iranian oil returns promptly to the market, analysis at ING say there's a potential for Iran to bring some 1 million barrels per day to the market over time. It could put commensurate weight on crude price over the coming month, said E.D. Moya, analysis at online trading platform Owanda. We have been here before and have seen talks fall apart, said Moya. What is a little different this time is that it seems the Iranians are willing to discuss the terms. If the Iran nuclear deal is revived, that could send oil price down to the low $80. So, what will hold crude price up? And OPEC production cut. The Secretary General of the Organizations of the Petroleum Exporting Countries hinted earlier this week that a cut might be coming, with 13 original members led by Saudi Arabia before its alliance with Russia and 9 other oil producers. The extended OPEC group has been raising productions over the past year since slashing it from May 2020 in the aftermath of the coronavirus breakout that decimated demand for oil. While this year's production hikes were initially insulated by Russia's invasion of Ukraine, which sent crude to 14th years hike of between $130 and $140 a barrel by early March. OPEC has become more vulnerable of late as a market downturn since May has persistently driven price lower. Crude price jumped almost 4% on Thursday on speculation of an impending OPEC production cut, but the rally didn't get very far as the dollar index jumped the next day to a 5-week hike of 114, dampening risk-taking in oil and other commodities. For the past 4 years, since the sanctions were imposed on Iran, OPEC has been trying to find the right strategy to deal with the eventual return of Iranian barrels to the market, said John Kilduff, partner at New York energy hedge fund Again Capital. A production cut seems to be a natural course of action for OPEC if Iranian barrels still the fine balance in the market, yet who among OPEC will cut? That's the question. Saudi Arabia, Russia, who will give up their market share? Iran's revived nuclear deal could trigger greater competitions among OPEC members for market share. With the return of a hungry and competitive Iran to the current market, OPEC production policy as we know it may see a radical change. One theory is that the alliance individual members might produce more to compete with Iran, depending on how much oil it brings to market. At the height of non-sanctions years, Iran produced as much as 4 million barrels daily at one point, so its capacity now is more likely at 2 million. The other theory is that the Saudis offer an olive branch to their longtime rival Iran convincing the Islamic Republic to join OPEC in balancing the market with responsible productions. This idea was floated as early as February by OPEC as a means to prevent intense rivalry for market share upon the end of the Iran sanctions. Since the pandemic, the Saudis have very carefully distributed the cuts and production giants within OPEC. But if Iran makes a legitimate return to the market, it will likely not participate in any OPEC's cut. Maybe that's all from me. Don't forget to like, comment, share, and subscribe. Thank you.